So it's been a crazy year. You're approaching. I mean, we just had Chuck. For you, you had this little IPO thing that happened, back almost a year ago exactly. Look at that in review for me. What have you learned? What has surprised you? I mean, I'll ask you the same question I asked Chuck. This has been unprecedented in a way.
Why do you say that?
Well,
I'm interviewing Andrew now.
Yeah, so he was going to give me trouble before. He said, "I'm going to ice you out on stage just for the cameras." No, give me a little bit of sense of what this year's been like for you.
Yeah. Well, it has been sort of a monumental year for PayPal. Obviously, splitting apart from eBay was a tremendous amount of work. We had to completely separate the infrastructure, the data centers, the data, content, 50,000 plus pages that we had to go through of content, just where names were combined together. But we started off better than we imagined. I think the biggest thing that happened with the split is we're able to really focus on digital payments. And payments right now is exploding. The whole industry around it is in flux. I think we're going to see more change in financial services in the next 5 years than we've seen in the past 30. And that's happening because you've got the explosion of mobile. Just to take time out of the equation, in the next 10, 20 years, almost all of the population will have a smartphone. I'm on the board of Flex. I know Mike and others are here. We see that bill of material coming down dramatically, and I think it's inevitable that most people will be connected and will have a smartphone. And that will give everybody in the world all the power of a bank branch in the palm of their hands. And then you've got the digitization of money occurring at the same time.
Right.
And although 85% of the world's transactions are in cash, that's slowly but surely giving way towards digitization. And that means that we can rethink and reimagine what financial services could look like. This is not going to be an extrapolation of what was. It is going to be reimagining what could be in a world of mobile and software. And that democratization of financial services is what we're focused on right now. It's very exciting, and we think we can make a real difference in that.
Yeah, when I talk to folks in this category, this area, there's always a little bit of frustration. You can only change so much in the financial stack. How much do you really feel that you can change, and how much can't you because of stability, security? I mean, there are a lot of levels to how money moves around.
Yeah. There's a saying that it's expensive to be poor. Unfortunately, in financial services, that's incredibly true. The things that we all take for granted, like cashing a check or paying a bill, sending money to somebody you love, getting credit for billions of people across the world, for maybe 70 million people here in the US, are incredibly time consuming. You wait in line to go and do it. It's like managing and moving your money is practically a part-time job to go do that, and very expensive. The average underserved consumer spends 10% of their disposable income on unnecessary fees and interest rates. That's $40,000 over their lifetime. And that's ridiculous. With technology, we ought to be able to make that management and movement of money faster, no need to wait in lines, more secure. You don't have to handle cash. It's done right over your mobile phone. Easier. Like, you can use software to create budgets. You can use software to incent savings. You can just make it easier to manage and move money. And importantly, less expensive. If you don't have an infrastructure based on bricks and mortar, you can do basic transactions at maybe 1/3 to 1/6 the cost of what a traditional financial system would do. So I think it's going to radically change the way we think about managing and moving money. And our credo is that managing and moving money should be a right for every citizen, not a privilege for the affluent. And I think technology will be an important part of that solve.
So you think that we're, I guess, looking at digital money all wrong? I mean, we think about it as oh, well, we already have credit cards and we have this, that, and the other, and it's such a hassle. But you're looking at it very differently. You're looking at it as something where you would otherwise have nothing.
Yeah, I think many people have approached digital payments in exactly the wrong way. What they think about digital payments is they think about tapping their phone at a point of sale instead of swiping a card.
Right.
And that's like, Ulysses and everyone else with the sirens crashing on the rocks of NFC. This is not about a form factor change. This is about a value prop change. If it's only about the difference between tapping a phone and swiping a card, that's going to be a long time coming. It's not hard to swipe a card.
Right.
By the way, I'm carrying a credit card in my pocket right now. It's not exactly weighing me down. And it's easy to go use. But think about value proposition changes. Think about the ability to order ahead, get rewarded for that, skip the line so you don't have to wait, pick up, be able to pay for that transaction with rewards you've instantaneously earned, and then split tender that with another payment type that you want to go do. And pretty soon you have applications that retailers are putting into place that change the intimacy of their connection with their customers. And what we want to do as a company, one, on the consumer side, is we want to democratize financial services. But on the merchant side, it's a little more nuanced. We actually want to be the operating system, the platform that provides that capability, the underlying plumbing for merchants to write that application. We'll do 100% share of checkout. We'll put in place tool sets and APIs for them to integrate the rewards right into our platform. We'll provide working capital. We'll provide tools and APIs for contextual commerce. All of that done on our platform on an unbranded basis. And then we'll bring the 180 million consumer wallets we have to that retailer and in a relatively frictionless way light up their application. And so we're really thinking about the world in two different ways. One is the digitization of commerce, and the other is the democratization of finance. So
you control your destiny better than ever now that you're an independent company again. How are you deciding where you want to play in that whole kind of spectrum, the whole system, and where you don't? Because we all know PayPal is the digital system. Many of us first used it by logging in and all that. But I've seen points of sale devices, hardware, branded PayPal. How do you decide how far you want to go into that? Because, of course, we have Apple, we have Samsung, we have Google. Everybody seems to want to take a piece of the pie. And for some of them, you compete. And for some of them, you actually don't. Right?
Yeah. Well, that's a long, complicated question.
Tell me about your business.
Yeah, exactly. So I think the way that we think about this is how do we solve the real pain points for consumers and for merchants, and what do we need to deliver against that to be successful? There's a lot of competition in this space. There's another pay that gets announced every other week. In many ways, there's sort of a cacophony of noise around that. One pay allows you to pay at a certain retailer, another pay with a certain bank, another pay with a certain operating system, another pay with only a certain form factor.
And it's tremendously frustrating. This was supposed to make it seamless, and now you have to think which one you even
Right,
want to use.
and it's very balkanized, and that's enabling consumers to turn to a proposition that they trust. And we basically have a platform that's agnostic to OS, a forum. It's agnostic to form factor. It's agnostic to point of sale. And so we give a consistency of experience across all of that. But the thing is that I don't really think a lot about competition. To me, competition is like gravity. Like, I don't wake up every morning and go, get out of bed and go, whoa, gravity is really weighing me down today. If it wasn't for gravity, I could jump 20 feet. Competition is the same way. It's always around you. And if you're in business, you battle against competition all the time. But I think if you spend too much time thinking about what competition is doing, and reacting to that as opposed to laser-like focusing on what customers expect and demand from you, and then using our unique assets. I mean, we do 6 billion transactions over our platform worldwide. We have 184 million customers that use us. We have risk modeling that's probably second to none in the industry. Our mobile payments exploding. And so we want to take advantage of those assets we have, that two-sided platform, 14.5 million merchants, 170 million plus consumers, and think about how do we extend that out to the major pain points that consumers and merchants are facing.
Let's talk a little bit about mobile. There are two kind of trends that are happening right now, and I'm fascinated by them. One is the person-to-person payments, the rise of those. We were talking about access earlier. I've never seen so many people jump on and use something like Venmo. People who aren't very technologically, they're not the first people to download the new app. They probably don't have, well, maybe they have Pokemon Go. But you get the idea. And then on the other side, you've got this rise of messaging, payments through messaging platforms and things like that. Let's start with Venmo. How are you thinking about that? Because one of the things that many people don't know is that those platforms aren't monetized now. Is that right?
Yep. So I think a lot of large companies, the way they kill a lot of things is they think about each one of their products with exactly the same measurements. So there are certain products within their life cycle that should have certain measurements where you are making them more efficient, more profitable. You are making sure you're solving any customer complaints around them, but you are measuring them basically in terms of profitability and maybe revenue growth.
Classic public companies.
Right. Then there are other products that you have in your portfolio that are just taking off. And the way you want to measure them is, are you gaining scale? Are you gaining scale? Venmo is a perfect example of that. Venmo is our service for really people under 30. There is a kind of a Venmo line. And the secret sauce of Venmo was turning a transaction into an experience, where every transaction you do, you share that in your social feeds that you have. And
although you don't have to.
You don't have to. You can turn it off, but
right.
Most do. And people check their app 4 or 5 times a week. It was the number 3 most popular app last year in the country. And it's almost ubiquitous in the millennial and the Gen Tech segments of the market. And that's growing extraordinarily fast right now, with 10 billion plus of volume on it. And now we are looking at how do we start to monetize that.
Yeah.
And so we'll allow a Venmo user to not just split a bill with friends or pay rent to somebody, because Venmo is sort of a verb right now for them, but we'll allow them to pay using their Venmo account at merchants that have PayPal accounts. And every time they do that, then we'll take our fee from the merchant to go and do that. And so, but we want to make sure that we are very wise and thoughtful about how we monetize Venmo. We will. It's a great asset for us, but we want to make sure that we're not putting the wrong metrics on it that sub-optimize the medium to long-term potential for that service.
Do you worry about kind of brand confusion and conflict? So just the other day, I sent some money using PayPal to my brother. And the other day, I sent some money to a friend using Venmo. And I had different decisions around that. One was a larger amount of money, and I decided I'll use PayPal. For some reason, I thought it was, I don't know, How are you thinking about that? Do people even identify the two? When I talk to people, they don't realize that Venmo and PayPal are the same company.
Yeah, I gave a speech at NYU to their incoming student body, and I thought it was a pretty inspiring speech, and they were all happy. And one of the students got up. They had went up to the microphone and said, that was great, blah blah blah. But I hate to tell you, all of us use Venmo.
I hate to tell you.
Yeah, because he didn't realize that Venmo was a part of PayPal, and I was like, it's okay, I'll take it. So I don't think there's much kind of confusion. In fact, I think a multi-brand approach is fine. Think about Facebook. They have Instagram. They have, which is, their photo service, but it doesn't matter if you use Facebook photos or Instagram. They've got Messenger, they've got WhatsApp. And our view of this is we want to be very thoughtful about a multi-brand strategy, but multi-brands don't intimidate us at all. As long as they're focused at a particular segment or a particular need, then multi-brand is fine.
Okay. You've seen, you mentioned the tremendous amount of growth in Venmo, but really you've seen tremendous amount of growth in the company, right? It's 2 years or something running. You've had double-digit growth. It's impressive. But your stock price has kind of basically hovered around the same thing. Now every executive says, I don't really want to pay attention to stock price, da, 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 da. Why do you think that is? Why do you think you're showing this great growth and the street is just not impressed?
Yeah. Well, just the facts on the stock. So we went out at 36. We're trading about 39, 39 and a half. So we're up about 10%, which, look, if we can do 10% plus year after year after year, we're going to have a lot of very happy shareholders. I'll be very happy about that as well. We don't want to be flashy. We want to be solid, consistent performers. And as you know, we've been public for a year. We were reporting PayPal results before that. And quarter after quarter, we've consistently hit or exceeded our numbers. There's a degree of credibility that comes with that. We've traded in a range from 30 to 41. We're trading at 39 and a half right now. So I feel okay about where we are from a stock perspective. But I think the big thing about PayPal is it's a difficult to understand company because we don't neatly fall into a category. First of all, outside of China, we're by far and away the largest fintech company in the world. And so fintech straddles technology and financial services. In fact, if you look at the analysts who cover us, and we got 40 plus who cover us, half are financial services analysts, half are tech analysts. People tend to want to take companies and say you're an issuer, or you're a merchant acquirer, or you're a network, or you're an international remittance company. We're all of those things together. And so when you try and do a like for like in terms of margin or in terms of PE multiples, any of that, it's difficult to find comps to go do that. So it takes time to understand the company. My view on this is we are fortunate enough to be in a market that has tremendous tailwinds behind it. Digital payments are exploding. The distinction between online, in-app, and in-store is blurring. That's a $100 trillion addressable market. Let's just say we're about a $10 billion company. Yeah. We think we probably have 0.1% of that market ahead of us. And we've got very good assets to play that game. We have to execute extraordinarily well.
Sure.
We have a number of competitors. But as long as we stay focused on what customers want, as long as we have the credibility that we currently have on the street, then honestly, I do believe that stock price eventually reflects that reality.
Right. I'm going to come to the audience for questions in just 2 minutes. I have one more, so think about them, please. So these acquisition rumors. First, it was American Express wants to acquire PayPal, and it was MasterCard wants to acquire. Yeah, you do. How are you looking at this? Should PayPal be acquired? You cut across all these different businesses. Do you want to be acquired? Does it make sense at a certain financial point? You're newly public. You have your control of your destiny. Do you really want to wrap it up in another company so soon?
So I understand why there are acquisition rumors about us. We're a unique company. We have tremendous scale. Half our business is international, half is domestic. We've got a strong merchant side, a strong consumer side, and really unrivaled assets in between. One of the most important things about fintech and other tech companies is what we do are very sophisticated algorithms. Algorithms questions we'll go through. The reason 80% plus of the population chooses PayPal to do cross-border purchasing is because we guarantee it. And the only reason we can guarantee it is because we know those buyers, we know those sellers. The reason we're having such success in working capital loans right now is we don't even look at a FICO score. We have a proprietary algorithm based on history with us in which we can lend working capital to small businesses. And the average small business that gets a working capital loan from us, their business increases by 22.7% versus a control group that goes up 1.6%. One other great fact about that is working capital loans, 25% of our working capital loans are in the 3% of counties in the US where 10 or more banks have closed branches. So think about that. We are really providing a service now to communities, small businesses, where it's sort of a win-win. They get working capital, their business goes up, our business.
So you're making a great case to be acquired. Who wouldn't want this in their company? Why wouldn't somebody acquire you? Should somebody acquire you? Does it make sense? Or would you rather compete against the MasterCards of the world, the Amexes of the world, the classic banks of the world?
Payments is a very hard business, and it's an extremely regulated business. And so most companies now, to the point you were making before, are seeing how difficult it is to get into payments. But our attitude now at PayPal, which is very different than where we were like 3 or 4 years ago, is we believe that there's an ecosystem and we ought to partner with that ecosystem. That we want to provide the platform that enables these other tech companies to do the things that they want to go do. You mentioned Messenger, Facebook. We power the vast majority of the payments. The Uber, Facebook, Messenger connection, we're the platform that powers that. We're the platform that powers Uber, any Uber transaction that you have, any Airbnb transaction that goes on.
So you'd rather partner?
We think that extending our platform is a way of working with the ecosystem. And for most of the ecosystem that can get that benefit, the difference between acquiring, for at least a $70 billion check versus getting our platform and being able to do what they want to go do and all the regulatory and compliance that comes with that. I think there are very, very few companies that could really look at that legitimately, and most of them we're working with. It isn't that acquisitions couldn't happen or might not happen, and we would obviously look at everything on the merits of that. We have a fiduciary responsibility to go and do that. But we're focused and very focused on building a great company over the medium and long term, and I think that's what shareholders expect of a good management team.
Fair enough. All right, let's go to the audience. Yes, in the back, way in the back there. Yes.
Hi there.
Oh, and introduce yourself, please.
Yes, my name is Anand. I work at Trusted. Can you talk about your viewpoints on blockchain and Bitcoin? I know there's been some news about your partnership with Coinbase recently, but there hasn't been much since. But would love to hear your thoughts about it.
Yeah. Everybody knows, I think everybody knows mostly about cryptocurrencies here. And a lot of people sort of separate out the Bitcoin from the underlying protocols underneath the blockchain. Bitcoin, right now, the vast majority of Bitcoins are held as a commodity versus a currency. And there's a lot of volatility in the pricing of Bitcoin. And so for most retailers who have very thin margins, what they want to do is immediately translate. If somebody pays in Bitcoin, they want to translate it into fiat currency to take away that volatility, because if the currency moves quickly, they could have a profitable transaction that turns unprofitable. So I think there needs to be, and Bitcoin just halved. There's a number of things that we need to think about from a Bitcoin perspective. And we are working in the Bitcoin community through Coinbase, enabling that to be integrated through our Braintree platform, et cetera, because there are some merchants that want to utilize that. The blockchain's a different story. The blockchain's a fascinating extraordinary piece of technology underneath that, I was going to claim that I was the creator of that, but I don't want to reveal that here.
Why would you want to do that?
Yeah. I mean, but whoever created that did a brilliant job in thinking that through. Because those protocols and that sort of public ledger done through mining, so it really is done in a way that's stateless and permissionless and is quite insightful and quite brilliant, and has the possibility of rearranging how financial services and many other applications are moved. And so we are spending now a lot of time thinking about blockchain technologies. There are others that are coming up. So we're looking at cryptocurrency in general, but blockchain, I think, offers the potential of tremendous promise. I think it is still 3 to 5 years away from any kind of, let's see, that tipping point one way or another. But it is the time for companies like us and other companies interested in this to be taking some of your tech resources and some of your engineers and figuring out, is there a different way of thinking about identity through blockchain, authentication through blockchain? There's a number of things to think about that aren't just the kind of zero cost promise of moving a transaction. It's much more nuanced than that. So I'm excited about the possibilities of it, but it's still very nascent.
All right, one more question because we are running out of time. Yes, right up here in the front.
Rick Chavey with Interworks. Dan, you talked about a $100 trillion retail market globally. As you think of the market, though, outside the U.S., and look at the opportunities for your offerings, where are the opportunities, the barriers? Which countries are more difficult? China, Europe? How do you think about those markets and what's addressable for PayPal?
Yeah. I think we are literally just scratching the surface on that global opportunity right now. Every country is different. They have a different regulatory environment, different compliance, different homegrown solutions that they've done. So China is extraordinarily different than India, for instance, which is very different than what's happening in Mexico. And then you can go to Indonesia, and it's completely different. The Middle East, very different. So you need to look at it individually, and you can't just group it together. There are going to be countries in where it is best for us to move into that country through a partnership. And we are looking at those pretty aggressively right now, because it would be very long and very difficult for us to move into those markets, if not impossible. There are other places that we'll just move in with our full value proposition, and we'll probably do well in those. And there are other places where we may acquire to jumpstart on that. But we are looking at, and there are other places we can use cross-border as sort of a Trojan horse to move into a market and have a wallet on the other side of that. Our Zoom acquisition, which was our international remittance, was not just for international remittances. It is to do well more than that, to almost have a send country be a funding source for a wallet in a receiving country. And so think about that as being much more than just remittances for us. So we look at every market in a unique way, and each one of them will require us to think about entry in a different way. It is certainly not going to be a one-size-fits-all.